So let's just dive right into the Inflation Reduction Act that was passed on August 16th of 2022. This provided a lot of clean energy credits. I'm only going to cover a few of those. It also extended some Affordable Care Act reductions. The act, as I just said, it had incentives for the green energy. So we'll cover 4 of the credits, which is the business energy credit under Code Section 48. We're gonna do the residential energy incentives, commercial building credits, and then we'll cover the clean energy vehicle credits. The Inflation Reduction Act was paid for through 3 different methods, which again, we'll just cover very briefly at the end there, which is the 15% corporate minimum tax, excise tax on stock repurchases, and then the extension of the excess business loss limitations. So I just listed out here for you some of the other credits which we will not be covering. However, if any of those do apply to you, please feel free to reach out to us and we can get you more information. Also just wanted to note that on November 30th, which was just a couple days ago, the IRS issued Notice 2261, which covers the guidance on the prevailing wage and apprenticeship requirements, which are a requirement for some of the credits listed above. The one we'll talk about today is the last one there, the 179D. So I'll get into that a little bit later. Just wanted to make sure that you are aware of that notice that was just issued. So the first credit we are going to go over is Section 48, the business energy credit. This is not a new credit. It's just the IRA, the Inflation Reduction Act, which I'll refer to as the IRA, extended some of the provisions. So as you can see here, the base credit rate is 6%. The credit is taken on the following property. There's 2 types. There's type 1 and type 2. The credit is taken in the year the property is placed in service. There is an election to apply the credit percentage to a portion of some qualified progress expenditures if the project's going to last greater than 2 years. Just note that on this one, the construction must begin before January 1st, 2025. What that means is that the construction must physically begin before 25, or you can also start that clock by paying 5% or more of the total cost, although that must be, you must then make continuous progress after that. So as highlighted below, this was an old credit. The Inflation Reduction Act added 3 more types of property that qualify. So those are highlighted. Next, we're going to move on to the residential clean energy credit. This is, think of this as your solar panels, things like that. The new act increased the credit, so it's 30% of the cost of eligible property placed in service through 32, and then it reduces for the next 2 years. There's credit limitations, and then it applies to the following property, which is, your solar equipment, wind energy, thermal equipment, things like that. So this is a credit. Oh, sorry. Yep. This is on your home. It's calculated on Form 5695, claimed on your 1040. It includes sales tax, labor costs, things like that. Should you go out and seek the solar property, your salespeople are going to have information that we need in order to calculate this credit. Just note that many states also have additional incentives. Not sure if I know of any in PA specifically, but again, I think the salespeople in these companies are pretty knowledgeable in this area about what qualifies and what doesn't. We do have an example here below. Just wanted to point out that if you do have, this is a residential credit. So to the extent that you are using part of your home for business purposes, that could affect this credit. So that is what that bottom part is for. The next is probably what will affect most of you, and that is the energy efficient home improvement credit. This is an important distinction, and you'll want to pay a little bit of attention to this because this was an extension of a prior credit. If you recall beforehand, you could make some qualified improvements. You got a 10% tax credit, but it was a $500 lifetime credit. So you could only claim this credit once, and it was limited to $500. Well, the IRA came in and they expanded this. So now there's for property placed in service after this year. Note that date. It is for property placed in service after December 31st, 2022. So think about some of the improvements that you may, now we're getting to the end of the year. So, you know, it's just the improvements that you might want to put those off another month or so and get an additional credit. So these are placed in service after December 31st, 2022, but before January 1st of 2033. And it's 30% of the cost paid or incurred for the following 3 types of items. Note that the 30% is capped, which we'll go over on the next slide. But the first one, it's 30% of installation of qualified energy efficiency improvements such as insulation, exterior windows, and exterior doors. Note that in this first type, so the insulation, the exterior windows, and the exterior doors, that first bullet point, it must be installed on or in connection with a home the taxpayer owns and uses as a principal resident. So that is only for your principal residence. It wouldn't apply to vacation or rental property. Next one is it must be located in the U.S., reasonably expected to remain in use for 5 years, and its original use must commence with use. So can't you buy a used door and put it in your home. Exterior siding is not eligible for this credit. Metal and asphalt roofs that did qualify for the pre-23 credit does not qualify after this year. So if you're going to do exterior windows and doors, hold that off another month. If you are going to do a metal or asphalt roof, try to get that done before the end of the month. The next type of qualified property, qualified residential energy property, that is your water heaters, your central AC, some electrical system and improvements and replacements. The distinction with that is that the taxpayer must use the home as a residence, but you do not have to own the home, and it doesn't have to be your principal residence. So for this type of property, it can be a vacation home, a second home, or if you rent and you happen to put something in your rental home, you can take this credit. The last one is the home energy audits. In that case, the taxpayer must own the home or use it as a principal resident. There wasn't a whole lot of information out on this. Congress is instructed to issue guidance by next year, and then the taxpayer must include whatever information that the IRS requires. So moving on, we'll go over these credits a little bit more. The taxpayer may rely on the manufacturer's written certification that a product qualifies. So as long as the manufacturer tells you, you can rely on that. A big distinction between the prior credit and the current credit is the prior credit was a lifetime credit, whereas currently it is $1,200 annual credit. So for instance, if you wanted to do your exterior windows, your exterior doors, you can go up to $1,200 this year and then perhaps put off a few projects for the following year to claim additional credits. So as you can see, they've raised it to $600 for exterior windows, whereas it used to be a $200. Another thing to think about is doing half your windows now and half your windows in the following year to max out that $600 credit. $500 for all exterior doors, $200 for any particular. So these exterior windows and exterior doors, that is where you have to have your principal residence, and these next few items are just any residence. And then you get up to $150 for home energy audits. So that is energy efficient home improvement credit. There is more information in a blog that was written a month or so ago out on our website. So if you need additional information on that, you can find it out on our website. Next, we're going to go over the accelerated cost recovery for green building property, Section 179D. Again, this is not a new law, but it was expanded by the IRA. So the Code Section 179D provides an accelerated cost recovery deduction for energy efficient commercial buildings and the credits taken in the year placed in service. Deduction is allowed for all or part of the cost of the energy efficient building that's placed in service after, again, 2005. So this is not a new credit, but for the IRA added additional deductions for qualified retrofits on any qualified property. The qualifying property is business property. It must be depreciable and installed as part of the interior lighting systems, heating, cooling, ventilation, or hot water systems, or the building envelope, and it must be certified by a qualified professional to show that it reduced annual energy and power costs, the above, by 50%. So the IRA reduced this requirement to 25%, where the old credit, it had to reduce energy costs by 50%. Starting next year, that requirement is lowered to 25%. The deduction is claimed by the taxpayer who is entitled to depreciate the property. So, where you have rental property, leasehold improvements versus the owner of the building, the credit goes to whoever is entitled to depreciate the actual property. And in the case of the government, and then next year after 2022, as amended by the IRA, tax exempt entities, the person who designs the EECB property may claim the deduction. So where tax exempt entities and government, they don't pay tax, they don't get a benefit from the credit, they can now pass that along to the designer of the property. And then just a few notes, basis of any property generating a deduction must be reduced by the amount deducted. And then the deductions claimed are subject to recapture under the 1245 recapture rule. So just so that you can plan for that. The credit is one of two different amounts, excuse me. The deduction is limited to the lesser of these bullet points. What I wanted to point out is the difference between the two is that for 2023, the base applicable dollar amount is 54 cents, which is increased by 2 cents for each additional percentage point of energy efficiency improvement, not to exceed $1.11. Down below, it's the same wording, except that it's not to exceed $5. The difference between the two is that if the company that is installing these, this property, if they meet the prevailing wage and apprenticeship requirements, you get the advanced dollar amount, the $5 instead of the $1, which is adjusted for inflation. So back to on slide 122, when I had mentioned notice 2261, this is where that comes into play. You can actually get an additional credit if they meet certain requirements. Those requirements are listed on the IRS website and in that notice. And of course, if you have any questions, you can always contact us for more information. Moving on to the clean vehicle credits. I did list the code sections of these credits because it can get confusing as to which one you're going to qualify for. So I tried to list the code section to distinguish between the three that we're going to talk about. The first one is the Section 30D Clean Vehicle Credit. It applies the existing credit. This is not a new credit. Again, it was just expanded by the IRA. So the existing credit, it applies to any vehicle placed in service on or before August 16th of 2022. So anything placed in service between January 1 and August 15th. Falls under these qualifications. It's a permanent tax credit for the new plug-in electric vehicles. The maximum credit is $7,500 depending on the battery capacity. The phase out actually goes to zero once a particular manufacturer sells 200,000 vehicles. So you need to be careful there. The IRA came in and now said that if you purchased a vehicle on or after August 16th, that vehicle only qualifies for the credit if its final assembly occurred in North America. So just be careful there. The revised credit that was placed in, that was with the IRA, it applies to vehicles then placed in service starting January 1st, 2023 and goes until January 1st of 2033. The maximum credit is still $7,500. However, you get $3,750 from meeting critical mineral requirements and $3,750 from battery component requirements. So where prior to that, it was $7,500 on the battery capacity, now there are two pieces. And then they added two new limits. One was the modified adjusted gross income limit. So if your MAGI is over $300,000 for a joint return, you do not qualify for the clean vehicle credit. And then if the vehicle's MSRP was $80,000 for vans, trucks, and $55,000 for all other vehicles, you do not qualify for the credit. Just a small note for vehicles placed in service after 12/31/23, taxpayers can elect to transfer the credit to treat it as a payment to the dealer. So instead of taking a credit on your tax return the following year, you can actually apply it as a payment to the dealer, but you must make the election when you purchase the car. Just listing a few things that apply to both the existing and revised, depending on when you bought the vehicle. And then the following rules apply only to the revised credit after August 16th, which would be that one credit is allowed per vehicle based on the VIN, and the VIN must be provided on the taxpayer's return. Some things to consider when on this vehicle credit is, if you are above the MAGI limit listed on the previous slide of $300,000, you should try to purchase the vehicle within the next month, or just try to plan to reduce your modified adjusted gross income in 23 or 24. The other item that I found was married filing separately could allow for married filing joint couple over the MAGI limit. However, how this applies to jointly owned vehicles is currently unknown. Taxpayers who want to purchase a vehicle above the MSRP should again purchase it in the next few weeks. And taxpayers who want to purchase a vehicle which has met the $200,000 manufacturer limit should wait and purchase the vehicle in 23 so that you can get the credit. Next, we're going to talk about the Section 45W credit for qualified commercial clean vehicles. These are commercial vehicles rather than personal vehicles. It's beginning December 31st, 2022 to January 1st, 23. So again, it doesn't start till next year. It is a general business credit. It's 15% of the vehicle's basis, but increases to 30% for a vehicle not powered by gas or diesel. It cannot exceed the vehicle's incremental cost, which is the difference between the clean vehicle's cost and the cost of an equivalent vehicle. The IRS should be issuing further guidance on this issue, and it cannot exceed $40,000. Reduced to $7,500 for vehicles with a gross vehicle weight rating of less than 14,000 pounds. Qualified vehicle is one made by a Section 30D manufacturer that is acquired for use or lease by the taxpayer, but not for resale. Must be subject to depreciation, meaning it must be a business vehicle, and it must meet both the vehicle type and clean energy requirements. Here's the following rules that you must follow in order for the credit to be taken. The credit reduces the vehicle basis, but you can elect out of the credit. You do not have to take the credit. Must meet air quality and safety standards. Only one credit is allowed per vehicle based on the VIN, which is why you must provide the VIN with your tax return. Note that a taxpayer cannot claim a 45W credit, which is the one we're talking about now, the qualified commercial clean vehicle, and a 30D credit, which is the one we just talked about on the same vehicle. So if you have a personal vehicle that you convert to business, you cannot claim the credit again. Just note too, if you're trying to decide whether to purchase a vehicle for business or personal use, this credit that we're talking about now, 45W, has fewer restrictions. There's no cost limit, there's no requirements for critical mineral or battery components, and it does not have to be assembled in North America. So higher income taxpayers may only be able to claim this credit as opposed to the other credit because there's no income limits on this one. Note that this credit, the 45W credit, does reduce basis of the vehicle, which reduces your depreciation deduction. So just keep that in mind. Our third credit is 25E, which is a previously owned clean vehicle credit. So going back to the first credit that we had talked about, 30D, that was a brand new vehicle. The Inflation Reduction Act added a credit for previously owned clean vehicles placed into service, again, starting after the end of the year, so next year, and then before 2023. It's a non-refundable personal credit equal to the lesser of $40,000 or 30% of the vehicle sale price. The qualified buyer must purchase the vehicle for use and not resale. The buyer cannot be claimed as a dependent, and you cannot have claimed this credit during the 3 years ending on the date of the current vehicle sale. Previously owned clean vehicles include a vehicle whose model is at least 2 years earlier than the calendar year of purchase. So if you're purchasing the vehicle in 2023, the model year must be a 2021. The original use must have commenced with somebody other than yourself, and it acquired by the taxpayer in a qualified sale. It's one of two types of vehicles. Qualified sale is the sale of a motor vehicle by a 30D G8 dealer for a sale price of $25,000 or less, and which is the first transfer to a qualified buyer since August 16th, 2022, which that date is again the date the act was passed. The second type of vehicle is a qualified vehicle, a fuel cell vehicle that meets the Section 30B standards. Note that a motor vehicle that meets the general 30D electric motor vehicle requirements, except that the final assembly does not have to occur in North America, and there are no critical mineral or battery component requirements. For this credit, again, I've listed out the following rules that apply. You can opt out of the credit. The vehicle must be used primarily in the US. You can only claim one credit per vehicle based on the VIN, so you have to provide the VIN with your tax return. And again, there are modified adjusted gross income limits to this credit, similar to the one we talked about earlier, but the credit or the adjusted gross income is half that of the other one. So if your modified adjusted gross income exceeds 150, you cannot take the credit. Again, like similar to the other one, the vehicle's placed in service after 23, the taxpayers can elect to transfer the credit to treat it as a payment to the dealer. A few planning considerations on this. If you're trying to decide between a new or a used clean vehicle, there's far fewer restrictions than the new vehicle credit, but the $25,000 purchase price limit on this credit may disqualify many used vehicles for the credit. Private party sales do not qualify. It must be purchased from a dealer. Again, married filing separate could help you to avoid the adjusted gross income limit. Dependent cannot claim the credit. However, a parent can claim if the parent purchased the car for a dependent's use. So if you'd like to buy your child a clean vehicle, this is something to consider. And again, the MAGI limits are much lower. Higher income individuals must buy a new vehicle to get a credit, and where a business vehicle does not qualify for this type of credit and a business cannot claim the 45W credit, which we just talked about for a used car. So your only option for business is to purchase brand new. Moving on from the energy credits, The Inflation Reduction Act just extended the ARPA premium tax credit. This has to do with the credits that you receive out on the marketplace. The provision, the 400% of FPL remains eligible for, I didn't say that, taxpayers with household income of 400% of the FPL remain eligible for PTC, which is the premium tax credit. The Inflation Reduction Act extended this through 2025. Otherwise, it would have expired at the end of this year. For the R&D credit, something that everybody's, small businesses should be aware of. If you cannot take advantage of the R&D credit, you do have the option to apply the credit to your payroll taxes. So this is, again, not a new rule. The Pre-Inflation Reduction Act law allowed you to claim a credit up to $250,000 against the employer share of Social Security tax. The Inflation Reduction Act allows an additional $250,000 to go against the employer share of Medicare. The credit cannot exceed the tax imposed for any calendar year, but unused amounts carry forward. And the new law applies to tax years beginning after December 31st, 2022. So to the extent that you have any R&D and you are not able to take that as a credit, please reach out to us to discuss this small business payroll credit. It's claimed on your Form 941 and goes directly against your Social Security, and then starting next year, your Medicare. Again, the bill was paid for by a few things, which is the 50% corporate minimum tax. I'm not going to go through this. It applies to 150 taxpayers in the US, which is probably none of you. So I'm just going to skip right through that. The excise tax on stock repurchases, there's a 1% excise tax on that. Again, I'm not going to go through that. It applies to very few of us. It did extend this 461L excess business loss limitations. This again is not a new rule. It just extends it through 2028. It limits your business losses on your personal return. For 2022, it limits it to $270,000 or $540,000 for joint returns. That is supposed to be $270,000 and $540,000. It looks like we missed a zero in both spots. I apologize. And then the IRA also put in, which I'm sure everybody is aware of, the IRS funding. You can read through that. I think Bill's going to cover that a little bit in his part. So not going to go through that. But if you want to know what the IRS plans on spending their money on, there's a little breakdown for you. I only